Hello, welcome back. Episode 86 today.
Oh my God.
Yeah.
86
Yep.
we've done already.
And we are back with a little Christmas special today because we are recording for the last time in 2025. So we are back next year with fresh energy, and we are ending the year strong with a very special guest today as well. Our very own president, Mr. Binger.
Thank you for having me back. I appreciate it.
No claps, please?
No clap. Oh, well, here we go. Yes.
Oh, I love it.
Binger deserves a clap.
Oh, this is so exciting. I'm just pumped up. Let's go.
Yes. Other than that, Keith, Kyle, and Lisa again. I thought we start with a little two truth and a lie, as always, traditional. I think it's a first for Binger to do that. And we have a little Christmas edition. So, Binger, I will tell you 3 statements. 2 are true and 1 is a lie. And you have to tell me what the lie is, right? Okay, let's go. We start with you, with our special honor guest here. So, statement A, the term Santa Claus rally was first formally identified by Yale Hirsch. B, trade volumes tends to be higher between Christmas and New Year's. Or C, since the 1950s, stocks have reached their yearly peak in December over 40% of the time.
And you want me to tell you which one is the lie?
You identified very light.
I'm going to say, I think B. I think trade volumes do not tend to be higher between Christmas and New Year's. I think they tend to be lower.
Okay. B. Keith, what do you think?
Wow, I like that. Very concise.
Yep.
Kind of banter around a little bit, but I think
Binger is straight to the point.
Yeah, and as far as A is, Santa Claus rally, I don't know. It makes sense to me. But
I never heard of Yale Hirsch either.
No,
sounds good.
Yeah, exactly.
Yeah.
Sounds good.
Yeah.
Exactly. And that's how I'm going to go. I agree with Bing. I think it's actually quite a bit lower. In the 1950s, it makes sense that the market at 40% of the time, since the market's generally much higher. So
I'm going to also go with B.
Yeah. Well, that was short and sweet. That's right. You're all correct. That's correct. They tend to be, trade volumes tend to be lower because people are out. Portfolio managers already made their bets and kind of position and are ready for the new year. So
you could have made an argument that there's a lot of volume because people are cash loss selling and all that, but I think they get that done before Christmas.
I think, that was. Okay, so because it's a Christmas special and because we have our president here, and December is generally a very busy month for us, for the investment team. We are traveling a lot. All of us have traveled in December. So let's start with you, Binger, because you are the busiest of us all, traveling all around the US. So where has your travels taken you lately? What are you doing there? Or what are we doing there for our advisors and clients? So why are we traveling at all?
Okay. I mean, let's start out why we're traveling.
Yeah.
So one of the things that I think makes Gradient Investments different from other third-party money managers is that it is this thing we call access, and we want and how we want to make the investment process work between client, advisor, and I'm going to say the portfolio management team. We want it to be collaborative, and we want it to be a two-way street. And thus, one of the things that we do for this access, for this collaboration, is when our advisors have a client appreciation event, we'll travel there and attend that event. Not only attend it and meet all their clients, but also speak there. Give a state of the state, the economy, the markets, where we see things going, those kind of things. And that's what we do. And I feel like that's a big value add. A lot of our advisors truly love that. Now, they've gotten to the point where they depend on it and they demand it and they love it. And so just this December, I've been in Chicago and Tennessee and Denver, and there's one other
San Diego
yesterday. That's right for advisor client events. And December is naturally busy because our advisors do a lot of Christmas parties.
Yeah.
So it's been a lot of fun.
Yeah. Where have you been, Keith?
I've only been to one. I think Mike's been taking a lion's share of them. So I've only been to Kansas City. So
Kansas City,
great trip, and like Mike said, exactly the same thing. Nice dinner, and meet clients, you can go give a little presentation. It just builds that relationship, and it's very well worth going to.
Yeah. And Kyle, a special one for you as well, because it was your first client event that you went out to since you are with Gradient Investments. So tell us a little bit about that.
Yeah, it was really fun. Went down to Chicago for the day. It was just like just in and out real quick from Minneapolis. It's just a 1 day thing, but yeah, it was really really fun to go and mingle with the clients and see everybody, and yeah, I would do it again.
Yep, great.
Well, you will do it again.
Yeah.
There's no option there. Lisa, how about you?
I was in Fargo, so I had one in November, and in December I was in Fargo, which was also a Christmas client event, which was great. It was a Christmas music bingo type of situation. It was a first for me, first bingo experience for me. Very interesting, very cool vibes.
Wait, first bingo ever?
Yeah, that's
First bingo ever.
was
Yes,
interesting. Wow.
yeah.
Did you have the stamper where you're seriously?
Yes, the
Oh,
dauber and
Oh,
stuff.
sorry.
Come on, Kyle. Yeah, these the advisors come up with great
Yep.
themes and events and all those kinds of things. I mean, this year I've done things like like a Roaring Twenties event. It just yesterday the event was a casino night.
Nice.
So there's a lot of things. I mean, I was at a Christmas party that had a champagne lady that had a basket around her with champagne glasses in it. So they really kind of pull out all the stops and make these events very nice for the clients.
So, Binger, tell us a little bit, when you are out at these events lately, especially this month, and you're giving a market update and you're getting questions or you're mingling with clients, which is always very special for us, right? Because that's the time of the year where we actually see our clients and our advisors in action when they're kind of doing their best. Tell us a little bit, what questions are you getting lately? Or how is generally the feeling of clients? How are they feeling about the markets in 2025? What are they feeling about 2026? What themes or questions are you getting most?
Yeah, a few things come up. I mean, number one, the markets have been good in 23, 24, and 25. So clients are pretty satisfied right now.
So it's an easy one for us, right?
Yeah,
Usually.
yeah, our feet aren't on the fire about the markets right now. But some of the questions I get, a lot of discussion about AI. I mean, clients seem to be aware that AI is driving the market forward. So they just want to know about that sector and stocks and things like that, and how we participate and all that. The other one is that, and I talk about this in some of my, when I'm giving my presentations, but there's clients really like, our buffered index portfolios. They like the fact that they can participate on the upside and get some downside protection. So they're complementary of those products. And outside of that, the biggest question I get is, thank you for your optimism, and keeping us in the market over the past few years. I'm nervous about 26, but they have confidence that we're watching the fundamentals and those kind of things. We're going to keep them apprised of where things are going, and if we see anything sinister on the horizon, which we really do not right now.
Great.
Yeah,
Keith,
that's well said. The only other two things I'd add, just like Mike, exact same thing. And then precious metals, get a lot of questions on gold.
Yeah.
Gold seems to be one of those things that's always in the news, and especially you get a little bit of that fear mongering. Some media like to throw out there, and then with as good a year as gold has had of being up over 60%, it's been a wonderful place to be. So there's a lot of questions: should I be there, or what inning we are? And then the other question is obviously tariff related. That's a big story in 2025. So you get a few questions on that, kind of where things are headed. But that's kind of quieted down in my last few visits, to advisors.
Kyle, for your client event, how was the general energy there in Chicago?
Everybody was excited. There was a little reluctance around the AI. People are, because the markets, as being noted, in 3 positive years. That's a good, it's a good run. Big years, yeah, right. So I mean, there's definitely a little reticence around like, what does 2026 look like, and how this time might be different than the .com. So that was there, and then I feel like the diversification with the private, or with the precious metals and Bitcoin, kind of like digital discovery, kind of non-correlated assets with the general market. That was definitely in the conversation. And then I think the last part was around the kind of more kind of the memification. So I feel like gold kind of falls in that, where it's like if you see something run, whether it be at Kohl's earlier this year or GameStop from years ago, like those quick like flash in the, it's like the shiny thing that people see in the news real quick, and then they want to ask about it. What's this? So there was definitely some of that.
Yeah, definitely.
Well, you, Lisa.
I can agree to all of that. I mean, that the general vibe and energy was great. Everyone was happy. A couple of not questions but notes on our structured notes. That they love it, and that it's a great product, and a lot of rave about structured note itself and what we are offering there, and also precious metals, especially gold. As a whole, but also silver, right? We saw that over the last couple of months. It did well the whole year, but especially the last 2 to 3 months. I mean, it's up over 100%, right? Now it's in the news, obviously. Everyone is talking about it. So I got some more questions around silver versus gold, and where's that silver performance all of a sudden coming from, right? And why is it better than gold? So a little bit more on that, and on the whole AI story of, are we done there, or is there still room to run? But obviously, yeah, it's an easy job for us at the moment, right? If markets are up and if we're doing a great job, then it's always very pleasant for us, the questions that we get.
You got to temper expectations a little bit. That's all.
Yeah, exactly. Great. So client events, to conclude, that was a success for us, for our advisors.
We were, Grady Investments as a whole was busier than ever this year as far as client appreciation events and, AUM recognition dinners and things like that. And I think that's great. At the end of the day, this is a relationship business. Advisors have their relationships with their clients. We have our relationships with our advisors, and then through these events, we also have relationships with the clients. So, we're really taking this relationship business as far down the road as we can.
Definitely. So that because we are in a Christmas edition special holiday season type of situation, and the holidays are usually a time to indulge in memories and revisit. So why not revisit the year of 2025 a little bit, with stories, our biggest stories, or the most surprising ones maybe, or the biggest things in the news when it comes to markets. And let's revisit some of them if we saw them coming, or if it was a surprise, and how we would rank them based on surprising and impact on the markets. So let's discuss that a little bit. I brought a couple of ones. So Binger, why won't you not start with what was your biggest story of the year, the most surprising one?
I'm going to give you a couple. I'm going to look down this list here a little bit, but I think the biggest one is that for the first time in a long time, international markets outperformed U.S. markets, and no one really expected that.
Yeah,
which isn't a surprise because people have a recency effect. So, the U.S. has done better for a long time, and they just expect it to continue that trend. But that trend was broken this year, and international markets did better than U.S. markets. To me, that was a surprise. The second surprise to me was the strength of gold. To see gold sitting at record highs and stocks are sitting at record highs, frankly surprised me. I would not have predicted that at the beginning of the year. So those are the two things that really surprised me. But both of those things have really helped our ETF endowment portfolios really do well this year. They've had positions in gold and international stocks, so that's really helped those portfolios.
Do you also think there is a little lesson learned? It could be also kind of an investor mistake in 2025, right? Being not diversified enough, which would include international, maybe not exposed to gold. And it was both a surprise. And I remember back by the end of 2024, after 2 such great years of the US, international basically very much underperforming. A lot of the questions were clients, why would I invest in anything else than the US market? And all of a sudden this shifted, right? Because now it's like, oh, I can see it now. So why is diversification always that hard until it's not?
Well, diversification, number one, is hard because it means that you're participating in a broad amount of asset classes. So you're in the leading asset class, but you're also in ones that lag when you diversify. So people are going like, oh, the natural inclination. Oh, why aren't I in have all my money in the best thing this year? That kind of thing. But that goes down to market timing, which we all know is, no one. Market timing is really an endeavor that no one's been able to really do successfully over time.
Mhm.
So by being diversified, when those asset classes do pop up and do well, like gold and international markets, that you're exposed there, and really I do believe in the thesis when you diversify, you lower volatility
Mhm.
and you participate when asset classes are doing well. And over time, I think it helps both your performance and it lowers your risk. So that's why you diversify.
Especially for our clientele.
Yeah.
Generally speaking, they're pre-retirement and retirement, so you don't want to be chasing that hot asset class, and then all of a sudden that class turns down, and then your performance is poor,
Yeah.
and then you're retired, so you don't have income.
Right.
So
So two of the biggest stories of 2025, also two of the biggest lessons learned for 2026. So Keith, what are your biggest stories or most surprising ones or most impactful ones for you?
I will say the one that's most impactful, I think, would be remembered again. Mike and I are older, so we've been doing this for 30 plus years. The one that I think we'll remember in 10 years from now is tariffs.
Mhm.
I think the
year of tariffs.
The year of tariffs. I think 2025, these tariffs that were introduced, increased by as much as they were. I'm not sure in 10 years they would go down a whole lot. And I think that if we look back in 10 years and say, man, that was the year of a pivot point, a huge pivot point. And this other stuff, Mike's exactly right. I think the other big surprise to me would be the gold outperformance. I mean, not too often you see markets setting, bonds having a good year, you got stock markets having a great year, and then on top of that, you have gold all-time highs.
Yeah, all major asset classes are in the green this year.
50,
That's
70%, and silver 100%. So that's I think what I kind of surprises me and what I will remember from this year's the tariffs. Again, the tariffs commentary is getting quiet, but they're in place, right? I mean, every quarter companies are talking about them, and we'll see how they.
On that, Keith, I think it's interesting. When the market corrected in February, March, I think markets were from peak to trough in February down 20%. Is that right? Close to 20%. That was all due to the tariff noise. We were hearing we're going to tariff this country 50%, this country 100, and this industry 200, all these things, right? And there was a lot of uncertainty over tariffs. But now it seems like tariffs and our tariff policy has fallen into a more certain environment. The environments where we're kind of washing out here, where everything that comes into this country, we're tariffing collectively at about 15%. And I don't think it's any coincidence that everything that we export, we're being tariffed at 15%. So I think one of the goals was to balance tariffs on what we get tariffed and what we tariff, and I think we've kind of done that now. I mean, we're settling in where the market feels pretty certain that we're going to settle in at about 15%.
Yeah. Perfect. Another, because I want to tie it back to the gift of lessons learned, right? The gift we have for our listeners for their holiday episode. And thinking, and you were saying that's the biggest surprise, biggest story of 2025 is tariffs. And Binger was adding, hey, the markets were down nearly 20%. That's when we would enter a bear market, or when we enter a bear market, we're down in April 19%. And that's
avoided the bear.
That's right. Just avoided the bear. That's again like a tough situation, right? When you look at your portfolio and you're down 19% or more, and then the bad word like of panic selling comes back in, right? You sell out and you say nothing to do with it. Markets are up over 40% since then, which is another lesson learned, right? Kind of not timing the market, because in Binger, that's a wisdom of his, is like you have to make two decisions, right? The decision to get out of the market and the decision when do you gonna back in. So I think that's a lesson learned.
Sure.
Not panic selling, not panicking, not doing anything without thinking, and not timing the market. And with Binger's wisdom, maybe he has some couple more wise words around the decisions that we have to make around that.
No, I mean, when you think about market timing, look, if someone could market time successfully, meaning they could buy low and sell high and repeat that over and over again, do you think they would share that with anyone? No, they would not. They would do it themselves and get rich. And I think you hit the nail on the head. When you try and market time, you have to make two good decisions: when to get out, when to get back in. And you got to make those decisions consistently over time, which no one's been able to figure out how to do.
Yeah.
Yeah. So So that's why I think the lesson is diversification is good. Market timing is tough, and in my experience, market timing tends to destroy value versus add value.
That's
Time
good
in the
one.
market more important.
Exactly.
Yeah.
Exactly. Kyle, what were your biggest story then, or most surprising, most impactful ones that you might or might not have seen coming?
Yeah, I think it's the comments around tariffs definitely interesting, and gold. Just sitting here looking at the list, there's a lot of stuff that happened this year. It does make me think. I don't even remember what happened in January at this point. I mean, something clearly happened. There were
Slightly up last year.
yeah, but there were news headlines.
Oh, yeah.
Do you remember what they were?
Tariff panic.
Was it?
Well,
I mean, pre-Trump though.
Yeah.
I mean, Trump was
The anticipation, I think, what
more
was to
of the
come.
administration.
Yeah,
Right. Yeah. But
Administrative worries.
there's so much that happened this year. So I think for me, the one thing as I look at this list, you see, tariffs, you see Fed independence, you see all these things with gold, and all this stuff kind of links together in a, kind of second, third derivative fashion. The thing that sticks out for me, and I think will continue to be a big driver for 2026, is the K-shaped recovery, K-shaped economy.
What is that? I don't know.
So basically, what you have are asset owners, people who own equities, real estate. You own your home, you own property, physical assets or similar, right? And as inflation continues to rise, and as the Fed policy becomes, more accommodating, those assets grow. And so you've seen the price of homes just since pandemic, they've gone up dramatically, along with markets. I mean, we were just talking about the markets are up dramatically. Gold's up, everything is up, right? Green years for the last couple of years. If you don't own those assets, if you are paycheck to paycheck household, and you don't have, those assets, then you're left behind.
You're losing. Yeah.
So you're seeing luxury, and you're seeing, dollar stores really have a spread between them. And so I think that is one thing that is on the horizon. You're hearing more and more about it. Stagflation is now entering the conversation, and I think that will only continue to be a louder and louder drumbeat going into next year.
And stagflation, the definition is you're in an inflationary period, and you're also in a recessionary period together. Right?
Bingo.
Yeah. But yeah, the income disparity.
Right.
That kind of what it is people, those households that own financial assets have done really well and haven't been hurt by inflation as much. And for those households, and there's a lot of them that don't own financial assets, are getting eroded away by inflation.
So, Kyle, what you were saying for the highlights or lowlights, however you want to say it, for 2025, I'm seeing out there you saw a year of a lot of uncertainty, right? When we still cannot remember what happened actually in January, because it was so much this year, and so many different fires,
Right.
or seemingly fires, were not always, the impacts were not always as dramatic, but at least
we set a record on the government shutdown.
We
had 43 days.
that is another uncertainty, right?
Yeah.
So I'm coming in again with the Santa Claus bringing the gift of lessons learned. So the lessons learned is like when investors are saying, hey, there's so much going on, I wait for more certainty. There's so much going on. Markets cannot be good in a year with so much uncertainty, with so many fires, seemingly fires everywhere. I just wait on the sidelines until everything is fine and good again. But Binger and Keith, I just pick on you too, especially because you have so much experience, so many years of experience in the business. Was there one year where you were like, oh, we're just chugging along, there's nothing going on, we're just going up?
No, there's always, people are always worried about things. There's always issues, concerns. There's this term called climbing a wall of worry. And that's what the market constantly does, because there's always something to be concerned about. And then the market continues to be successful over time as it climbs that wall of worries over time.
So that again, right, shows when we look at the S&P at the market this year, we're up double digits, right? Despite all the uncertainty. So you do not want to miss out on that,
Well,
staying on the
and
sidelines.
to that point, historically, the worst asset class you can be in over really any period of time is cash.
Which is a typical asset class for, oh my God,
Right.
something hits the fan, I'm just waiting there.
Right.
Yep.
Yeah, because if you think about inflation too, your real purchasing power is eroding as your cash is sitting in your mattress. And also, as we've seen this year, the rebound in markets and asset holders, those financial holders, have seen dramatic outperformance. So even in down years, it's typically short-lived. And to Bing's point, is the wall of worry, there's always something to worry about.
Yeah, definitely. So we brought the gifts of the biggest stories of 2025 and some wisdom of lessons learned for investors. So I think that's a great one. I would add, like, for my biggest stories of the year, maybe not a surprise at all, but the big story, continuously big story, is the still outperformance of the Max 7. That is that they are still driving the bus after a couple of years, right? And there was like the thinking of, we have a rotation. They're toning back a little bit. The other 493 are purchasing a little bit more. And then we are kind of chugging along, but they're still driving the bus very much. So much that there's no worries if you're an AI bubble, if you're nearing that, right? I mean, especially in the second half of 2025, that kind of gained steam, that discussion. So I think that was a big story for me. Not necessarily surprising, but maybe the impact and the severity of it may be a little bit surprising.
And I think that's one of the things we can look forward to in 26 is kind of the broadening of the market. Is that everyone's been, investing hard and concentrating in these, 7 to 10 AI stocks, that the other 490 stocks in the market, I think, have room to catch up per se. And that'll be my theme in 2026, is the broadening of the market will help the market in 2026.
Yeah, definitely. Great. A lot of wisdom today. So let's do a little fun stuff about what are we all doing for Christmas next week. So Binger, I start with you again as our guest of honor.
Well,
do you like Christmas in the first place, or are you a Grinch?
No,
That's the first question. You're not a Grinch.
I love Christmas. I love wearing Christmas sweater, all those kind of things.
Yeah.
The ugly ones or the regular ones?
The ugly ones.
Okay, excellent.
And just reindeer head things, and all that kind of stuff. I love doing all that. But no, it's going to be a really fun holiday season. I have a son who lives in Tampa Bay, and he's coming up, and his wife are coming up for Christmas. I have a daughter who lives in San Francisco. She's coming up. Actually, they're both coming in on Saturday.
Yeah.
My oldest son, who lives in Minneapolis, he'll be around, and they're actually having a baby on December 31st.
Oh,
yeah. So I'll be a grandpa for the first time.
Wow, Binger.
Yeah, which is exciting there. So
what a cool granddad he will be.
So this is it. It's just gonna be kind of a special Christmas. Everybody's gonna be home.
Yeah.
We're anticipating having a new member of the family.
Yeah.
We're gonna be out early, so it's gonna be a lot of fun.
So Binger, that sounds very fun. So that sounds like a great family get together. Do you have some cultural weirdness with us to share? So maybe some Minnesota related Christmas traditions, some your specific family related Christmas tradition that you kind of implemented at some point, nobody knows why, and now you just kept going with it?
No, we don't. In fact, and I'm going to compliment my wife here a little bit. She she goes out and has almost a different theme every year for Christmas.
Oh.
Yeah, and surprises me. I don't even know what the theme is, but they're always
from decorations wise, or the food, or
decorations, food, all those things. She may have a baked potato bar for Christmas, or a taco theme. Or last year she made a pop-up bar in the basement, where she like overly decorated everything down there. Lights were everywhere. So she's very good at kind of mixing it up a little bit, which is fun.
That is nice. That's a good tradition. Do something different every year. I mean, Keith, what about you? How are you celebrating? Are you a Grinch, first of all? We want to know.
Not a Grinch. This is my probably favorite time of year. I love Christmas. It's just the holidays, family around, just kind of enjoying it.
Are your kids coming all?
Yeah. All 3 kids are all from college, so it's nice. It's break. I love the being empty nester. We talked about it before. It's fine. I love the chaos of the
Mhm.
kids in the house and just the banter and always something going on that I can stick my nose into and figure out what's going on, so, which I enjoy.
Yeah.
So no, but I love Christmas. It's a great time of the year. My wife's side, our side, we host, we go, we're just
Mhm.
busy. It's just a fun time of the year. And then to your question of any kind of traditions, no, I mean the big one we do the start to Christmas is right around that Friday right after Thanksgiving. We do cut down the tree,
Mhm.
the Clark Griswold thing, and I always get a tree that's too big and gotta wrangle it in the house. But
So like in the movies, like you open up the tree and it's like,
pretty
oh,
much, yeah, no squirrels have popped up yet. And the other thing we do, which we've been doing for the last decade or two, is we obviously exchange gifts. But then we've been doing that kind of a swap game where you can steal presents and stuff like that.
Ooh,
and our
cool.
family gets just brutal. I mean, people are taking stuff that grandma wants, and it's just like they don't care. It's just like wow, it's like a little.
everyone is on their own.
It gets a little aggressive, so which is kind of entertaining. So a few things that makes it even more fun. So
Yeah.
it's a good time.
Nice.
That sounds good. Kyle, what about you?
I am not a Grinch. I do enjoy Christmas. We do very similar Clark Griswold. We cut the tree down.
Mhm.
That's a relatively new tradition. We've gotten a live tree for quite a long time now.
And
but
you have smaller kids,
Yeah,
so
yeah.
maybe some newer traditions in
new
your family.
traditions, coming, right? So 6 and 8 year olds. So this is the first year that they actually helped drag the tree through through the field, and that was fun. And then this year was the biggest tree we've ever gotten. It was like 12, 13 feet, something like that. So it's a big one. So getting it on the car was,
emptied out your wallet on that one.
Yeah. So well, we actually there's a tree farm up on the way back from the lake house, and so that's where you very reasonable. It's like $100 for any size, doesn't matter. You just
Nice.
whatever.
Might as well take the biggest one.
You take the biggest one, yeah. So, but our tradition we've been doing since before the kids were born, when we were in Colorado still, we do a gingerbread party, which I ripped off from one of my old colleagues, where you basically make the gingerbread houses. So that's what we'll be doing this actually tonight. We'll be rolling out the gingerbread and cutting the shapes out for the houses. We'll assemble them, and then we have it's like a potluck where the family comes and you're required to bring 2 items from like a gas station, basically. So you can bring like gum or like just random candies or cereal or whatever, and then
stick on the house.
You stick, So everyone shares, those items, and then you have a competition. And we usually send for the relatives in California or whatever. We'll send the pictures, and then they're the unbiased judges.
Oh, that's solid. I
So
like that.
It is good.
That's a big operation.
Yeah.
And
Kyle, you have one or two kids in
2
hockey?
kids.
2 kids.
One kid in hockey.
One kid in hockey. Okay, and hockey doesn't rest during the holidays.
We were there last night.
Yeah. All right. Yeah, I remember the days when my kids were in hockey, and hockey just continues through there.
They don't care
for the holidays.
Yes, right,
like that.
right.
Yeah. Practices and tournaments.
Yeah,
all
we've
those
got
things
Saturday and
continue
Sunday this weekend
continue
too.
on.
Yeah.
And that's the Wayzata Hockey
Yeah.
Association.
Yeah.
That's where my kids are.
Yeah, he's loving it.
Yep.
So
And Kyle, because you have like such craziness going on that we have established that like smaller kids, sports and all of that. So are you more the gifter, like the gifting kind of person that has everything organized, everything together by Thanksgiving, everything under the tree wrapped up? Or are you more the, it's the 24th. Oh no. And Google what is open and kind of tries to get out something.
I rely this is where my wife comes in. She is
She's the elf.
She is the elf, and she is extremely organized. So probably to a fault. Like she's very, very organized, and I'm very grateful for that. So but yeah, I do throw in terms of like an unusual thing. I always purposely buy a little coal for myself.
For yourself.
And then
Where do you get coal?
On Amazon, you can get
You get lumps of coal.
it's just like a little
Amazon's got everything, Bing.
It comes right from China. It's great.
It's not like the charcoal brick.
No. I've thought about that, but yeah. So the kids last year were like, "Dad, you were naughty last year."
Shocking.
Yeah.
How about you, Lisa? What you got a bunch of different traditions, I'm sure.
Yeah. So, I mean, my Christmas tree is 4 foot tall, so a little bit smaller
Live
than
or-
it's like a got it for $5 at a garage sale. I'm very proud of that. So anyway, it's just my husband and I, right? So family is back in Austria. So we have like in the afternoon, and we celebrate generously. All of our Christmas celebrations culturally are done on the 24th. We wrap up everything, gifts, food, family, everything is on the 24th. Everything is wrapped up in Christmas Eve, and in the Eve, the presents are delivered and all of that. So we are doing that. We just, get together, cook something up with a couple of neighbors who are also kind of expats from somewhere in the US, or kids out of the house or alone or whatever. It's usually very traditional in Austria. You either have like soup, like noodle soup, yeah, or you have a carp.
Carp.
Yeah.
Smoked?
Yeah.
Smoked?
Yes, or
Smoked carp,
yes.
yeah.
It's very.
You do?
I like smoked fish,
Yeah.
but I've never had.
I don't
smoked
even know where this traditional Christmas Eve food is coming from, because carp we don't really eat.
No one
Through
eats
So is
all-
Mr. D smoke? He has a
No,
smoker box
we
and he's-
just we leave that all out.
Oh,
We just cook whatever, and some cookies and stuff. So we do more like a friend's mess,
Very nice.
So not very traditional because our family is over there. But in the afternoon, we do like some video chats with them and kind of celebrate
great.
with them, because they're 7 hours up front. So we kind of looking into how they are celebrating and stuff. So it's a kind of a little bit of everything.
Are you
but
making any Minnesota salads?
no Minnesota salads for Christmas, unfortunately. But I have to do more research on that, because I think that has to be studied. The
You are
Minnesota
queen of
salad situation.
decorations, so how's your decorating skills on Christmas time? I know you do Halloween. You do every other
So the Christmas tree and everything is up since November, I think the second week of November.
Before Thanksgiving?
Oh yes.
Yeah,
Oh,
yeah,
I
yeah.
cannot wait for Thanksgiving. Oh no.
And then you take it down like in April or something.
I take it down. So the Christmas tree saw March this year.
March. Whoa.
Yeah.
That's aggressive.
So I tried to aim for end of January, but it could be it
Okay.
could drag out.
That's
Yeah,
good.
yeah,
Okay.
yeah. It could
I
stay.
get it.
My wife's got the Christmas tree coming down on Christmas night.
Oh really?
That's too soon.
And
Ooh.
everybody's leaving. She's like had it with everything.
Oh, let's throw it out.
Working on the first week of January.
First, yeah.
We do the same thing.
First week of
Yeah.
January. Yeah.
So before we wrap up, I want to, just, Christmas time is time of reflection, great investments. We had a wonderful year. I mean, I believe we crossed over 7 billion in AUM, and then we crossed over 8 billion in AUM, and we're close to 8.5 right now. So it's been a successful year on those metrics. The investment team went through some transitions a little bit. We had Jeremy Bryan, who led our investment team. He went out on his own. He had to let loose his entrepreneurial spirit, and he's out doing his thing. But Keith has stepped into that position where he's leading the investment management team now. We brought in Kyle. I mean, Kyle had a wealth of experience before, and Kyle, congratulations. I mean, you really hit the ground running. I feel like you really did. You helped. Yeah. And Lisa, Lisa is no longer investment analyst now. She's an associate portfolio manager.
Clap.
So congratulations there, Lisa, too. So, so we had 3 members of our investment team. Our investment analyst, David, moved back home in Montana. We've had Tyler Ellegard, who's been with the team for a long time. He was promoted and is running or the president of another company in the Gradient Financial Group family of companies. Jeremy went out, but the investment team hasn't missed a beat. We're backfilling with strong people like Kyle coming in. We got some more good candidates coming in. We replaced David with a new young investment analyst out of Cape Central. So Lisa has stepped up. So all in all, I'm just some people would call it a tumultuous year. But everyone has stepped up, and it doesn't surprise me a bit. So we haven't skipped a beat. So good work to all of you here. It's been great.
That was a good year, I think, right?
Yeah.
Yep.
On to 2026. So
Yeah.
we'll give a little forecast at the beginning of the year for what our outlook is.
Exactly.
A little teaser.
Little teaser, yeah. We have a lot to talk about, actually. Still have,
Do we?
yeah. I mean, for the new year,
Oh,
not today.
Time.
Yeah,
All right.
we need a little teaser for all listeners, so
see.
they're coming back, right? So the next podcast will be the first week of January.
And that's when you're going to discuss your outlook for 2026.
Yes.
100%. I know you
Yeah.
love predictions, so we
Oh.
always add little predictions.
Can't wait to hear all the opinions and forecasts and what we're looking at next year.
So with that, to all our listeners, advisors, clients, Merry Christmas, Happy New Year.
Yeah.
And we are back.
holidays,
Happy
everyone.
holidays.
Yeah.
And we are back next year.